Hey there, before we dive in, I want to ask you guys a couple questions. We did get some feedback last week on our videos. What do you like to see? Do you want to see more training videos? Got some feedback on that? Yes. Keep doing what I'm doing. Keep doing the economic outlook. You want to subscribe to my trades? So you want to see what I'm doing, like every single one of my trades? I do quite a few different things, so I can show you guys how I do that. An idea that did not throw out there last week was one-on-one mentoring. Is anybody interested in one-on-one mentoring to see how to set up trades and kind of walk through steps and maybe give you some confidence when you do place a trade? All right, with that, let's jump in. From an economic standpoint, we really didn't get much this last week. We got the ISMs, manufacturing, no real surprise here. ISM on Wednesday. The big thing was unemployment. We did get ADP. We didn't get the big jobs report they were expecting because of the government shutdown, but we did get ADP. That's all we have to go on right now. ADP is known as the always wrong ADP report, but right now, it's all we got to go on. And it came in at 42,000. Expectation was 25,000. So markets responded favorably on this one. Rates went up and the market went up. So what you're looking at here is the 10-year rate. You can see it was pretty flat throughout the week. And then on Wednesday, when that report came out Wednesday morning, it shot up probably about 10 basis points. And the reason for that is because stronger employment means that the economy is doing better. If you're wanting rates to come down, you want weaker employment reports. So this shot up about 10 basis points, and then throughout the week came back down. And then because of the government shutdown, some news that came out on Friday, look at this, it just came back up, and that was on the 10-year rate. Looking at the market itself, here's the market. Take a look at Wednesday morning. We saw the market come up because, hey, it's not as bad as we thought. So this is all we have to go on is ADP. And then look, news came out about the government shutdown. They may have figured something out. There was just some positive talk on that on Friday, and then the market went back up on Friday. So let's take a look at the Fed Watch tool. This is kind of what everybody watches. The expectations of a rate drop pulled back a little bit. We're still at 67% for a rate cut, chances of a rate cut in December. And then it looks like it's going to hold for a little while. And then in April, it looks like we get another rate cut. And then in July, it looks like we have another rate cut. So really only 2 cuts next year, with 1 in December and then 2 cuts next year. So I don't buy this. I think it's a little bit light, especially here, April, May timeframe. You're expecting to see Jerome Powell step out, and you know that the Fed will be aligned with Trump after that, because Trump is going to pick someone that thinks like him, and he wants a 200 to 300 basis point drop on the overnight rate. He's going to find somebody that agrees with him, and then this will come down. You'll see this probably come into that 2 to 2.5 range. So I will probably be buying ZQZ 26, which is this future here, ZQZ, ZQX here, because that's November. Go out one more, that's December. Let's take a look at that. There's ZQZ 2026. This is the terminal rate for next December. There's not a lot of volume behind ZQZ. You can buy this for $2,000 a contract. Each point move, each basis point is worth $41.67. So there's the unemployment report, came in stronger than they were expecting. So that pulled out the rate drops or the expectation of rate cuts. So that pulled back quite a bit. I bought right in here around 96, 91. Actually, I think I bought it right here. 96.91, and then it fell a little bit, and then look at going into Thursday, we pulled back. I ended up selling right here. Now, I may regret selling because it will go up. What I'm hoping for, though, is a little bit of a pullback. I'm hoping for some positive news. Economy's doing stronger, and those rate cut expectations, I'm hoping that narrative stays for a little bit, and then I will end up buying again in this range. All right, so with that, let's go back and see what happened on Friday. You've got the Michigan's consumer survey that came out. It was the worst since 21-22 timeframe. People aren't feeling good, and mainly it's because of the government shutdown. That did not sit well with the market, and that's what caused the market to fall on Friday. And then we got positive news about the government shutdown, so we're in this yo-yo. We've got a lot of volatility going on. Let's take a look at next week. Really not much. There are no high impact. We are flying blind. Look at all this data that we're supposed to be getting. Inflation, jobless claims, you name it, retail sales, all that is delayed. So we are flying blind. Not a lot of risk events from a data perspective. I would say that if the government reopens and there's any news about that, you can expect the market to move. Speaking of the market, let's take a look at what happened this last week. We did have a pullback. We got a pullback from our highs, roughly around 4%. That's healthy. I'll take it. It also increases volatility, which as an options seller is great for me because premiums become more expensive. So I'm happy. I'm happy that volatility is back. We did fall, but then buyers came back in on Friday and rushed in. We'll see what happens. So this was a pretty big support zone. Not the biggest one. This is the biggest one, 6,500 range. This is the one where we've hit several times. You can see here it's bounced, and then it didn't quite make it, but this is the one you want to watch. If it gets down to 6,500, be very careful because if it goes below that, it is going to be very bearish for the market. But if it bounces, that'll be good. Here, we want to see another day. We want to actually see Monday pop above this. This is a decent support. And if it pops above that, then you can expect a pretty good rally from here on out. Again, once the news about the government shutdown comes in, I think that's going to be very positive for the market. Earnings, 295.73. So we're at 22.8 on the PE ratio. Pretty high, but a lot of people are pulling earnings forward because of AI. Look at the rest. S&P down for the week, 1.63. Russell 2000 was down. Ended up selling puts at 240 on IWM. That's the IWM stock that I've been talking about. Sold puts at 240. When it rallied, closed that, and I actually moved it forward to next week and sold 237. 237 puts. Those actually expire on Monday, but I've got another order in for some more 237s for November, I think it's 21st. So basically, I'm just selling those puts and just collecting premiums while I wait for it to come back. And when it comes back, I'll pick that up and then we'll move on. TLT pulled back because of ADP. Home builders had a flat week. I sold puts at $98 on XHB. Utilities, pretty flat. Data centers came in 2.77 for the week, a negative drop. And I went out and I was going to actually buy it, sell some premium against it, basically sell some puts, but there's no liquidity. So I'll take a look again this next week and see what it looks like. I don't know if I'll play that one because I do like selling puts. I don't want to just buy it outright. I'd rather sell puts, collect the premium, and then if it gets put to me, then I even buy it at a better discount. AG&C, great week on AG&C, 3.4. And then live cattle futures. Remember I told you about the short opportunity? Man, it tanked. It's down over 10% from its high. Waiting for it to pull back and go back up before I get back in. But that was the short I was talking about. What a move. Let's go into SPX a little bit more. Let's look at the put call ratios. So this means that more puts at this point are being bought than calls. So anytime this rolls over one way or the other, it's usually a buy or sell signal. It's a contrarian indicator. And right now we are on a sell signal. Looking at your new highs and new lows, another way to look at market breadth. Market breadth has been very poor. You can see that here over the last couple of weeks, it's been very negative. This is not a buy signal. This is actually a sell signal. And then taking a look at VIX over the last year, you've got a buy signal now in place because of those buyers rushing in on Friday. And basically, you got a VIX spike speak. So we're on a buy signal here. And the VIX has been a little bit more negative, but your 50-day and your 20-day are still below your 200-day moving average. So from that perspective, VIX doesn't look too bad. And looking at the volatility structure, the term structure, your front month is still in contango. This is not a negative. This is a positive. So a little bit of mixed signals on the market itself. This is where it's a great time to be an option seller because volatility is up. And then if it does fall, then I will pick up the market at a discount. But if it goes back up, volatility will collapse, which means premiums will shrink. And that is good as an option seller because I'm selling them for more because people are willing to pay more for them. And then they'll end up expiring probably worthless. All right, so enough about that. Overall, the picture is mixed. We've got a very strong support. My personal belief is I think we're going to go up from here. I could be wrong, but that's where I can sell options and be wrong and still make money. All right, enough about that. Let's go into volatility crush. I did not sell puts last week, so I didn't collect any premium. If you did, please drop some notes in the comments and share some inspiration. But what I did play is volatility crush and did very well. I entered trades right at the close of the business day when earnings were expected, and then collected all the premium the very next morning. Look at some of these returns that I made from EOG, 42%, Airbnb, 50%, Win, Hotels 47, Fortinet, Hood, Energy, all these were profitable, did very well. I will be entering some trades again this next week. If you want to know how I did it, send me some notes in the comments and I'll actually walk through it. But DoorDash, I did take a bath on DoorDash, and I say really take a bath. It was $238. I sold the front month straddle for about $20, but then I bought the back month strangle and I paid whatever it was for that. All in, if you were to buy 100 shares the day before earnings at $238, those guys are down about $4,000 right now because DoorDash is down to about $200 per share. I ended up at this point, I'm only down $200. So instead of being down $4,000, I'm only down $200. I do expect DoorDash to come back because when you look at the earnings call, management was very positive. The reason why DoorDash tanked is because everybody heard one statement, and that was that they're going to spend hundreds of millions of dollars in the next year to shore up their business. They've done some acquisitions. They're going to invest in technology. And it's like the market looked at it and said, you know what? I care only about the quarter earnings, and they're going to spend a ton of money, and it's going to affect quarterly earnings. So everybody hit the panic button and ran. I think this is good for DoorDash. Now, DoorDash does have a high PE ratio. They're like 103, which is pretty high. But who doesn't use DoorDash? My kids use DoorDash. Everybody uses DoorDash. They've got some pretty good investments that they're going to be doing, which I think is going to help the stock. So it's also got very strong momentum. And for that reason, with that strong momentum, I just don't see the stock really dropping too much. I ended up picking up here. I think my cost basis is like 205. I expect this to go back up. I really bought it on sale. And if I'm wrong and it tanks, well, no harm, no foul. I'm only out a couple $100. So I think that the market overreacted in this case. And even if it tanks and it goes down to 150, you know what? I'll put a collar down at that point because I'm not going to be out anything because the insurance that I bought is going to cover me all the way down. And then I'll turn around and do another collar and eventually it'll come back. So I really don't care how far it goes. Derivatives will protect me here. And if they don't and all hell breaks loose, then that's fine. I'm only out a couple $100. Okay. So enough about DoorDash. Oh, one more thing about DoorDash. The analyst ratings really rank it anywhere up to 360 down to 204 or 205, right where it is right now. So even 40 analysts are thinking that it's going to go up. So with that, and we had a positive earnings report. Yes, they're going to do some spending. I don't think it's a deal breaker. So I'm willing to own that stock. I'll wait till it comes back. All right, so speaking of Volatility Crush, we do have a few more earnings coming up this week. These are all my candidates. I will be playing a handful of these. I will make the decision on the day of earnings, but at this point, these are the ones that I've selected. I've built a piece of software that goes out and finds the list of candidates that are good for me, and I will enter these probably sometime this week. I'll probably enter most of these. Volatility Crush has been very good to me this quarter. So all that said, if you want a little bit more insight into this list, let me know. Finally, I would be remiss if I didn't talk to you about this new indicator that I have written. And it is an indicator that's based on standard deviations and looks at moving averages. So here's one for Target. Target came up with a strong sell. When it has a strong sell, that's when I'm going to buy puts on it. If it has a confirmed buy like this one, these aren't strong buys, then I'm going to sell put spread. If this would have just came in as a regular sell, then I would have sold a call spread. So if you want a little bit more detail on how that works, let me know. But look, going back, here's a strong buy. Strong buy. Man, if you would have bought here, that would have been fantastic. Strong buy. And then you got strong sell. So you can see that it's decent. Now here you got a couple of strong sells. This would you would have been out. Not everyone works, but that's okay. The majority of them do. Now, what I like about this is if you have TradingView, you can buy this indicator and select it here, hedge it forward, modified Bollinger Bands. I can go in here, set my filters, recent sell, recent buy, there's a recent strong buy or a recent strong sell. So let me just click here and I'll show you how to set this up. So there it is. Just give me anything. It's a true or false. And so anything above 0 means it's a true. So that means it just hit a strong buy signal. I go and I scan my universe. You can put this on any watch list. Right now I have it on the S&P 500. And these are the stocks that come up and say, you know what, these are candidates to consider buying something on. And I hold some of these like Altria. Take a look at, I'll just go down to the bottom. Let's look at waste management. All right, so there's waste management. And you can see just came up with a strong buy signal. So with that, I will be entering a position on this one. Looking at Tapestry. Again, got a strong buy signal on this one that just entered. Depending on what this one looks like, I will actually probably buy calls on this one. I will not sell a vertical spread. But anyways, you get the idea. These are all the ones that just had a strong buy signal. I can go through here and say, give me everything that just had a strong sell signal. Scan my universe. And I don't have anything that's on a strong sell. So now if I just look at, give me a buy signal, not a strong buy, but I kind of want to look at it. Maybe I'll sell a vertical spread on it or something. Then I can say, give me a recent buy signal, not a strong buy signal. And you can see I get a little bit more. I'm going to get the same list because it's also a strong, some of these might be a strong buy, but the regular buys might be not strong buys. So let's take a look at Kroger. Let's see what that one looks like. Kroger here, strong buy. Look at that. So I took a position. I actually took a position on Friday on Kroger. So we'll see how that one plays out. All right, so if you're interested in this indicator, let me know. I'm going to sell it on a subscription basis for $50 a month. If you have TradingView, you can just add it right to your indicator list. So for $50 a month, you can get this, and then you can go scan the universe and do what I do. So with that, hope you enjoyed this video. Happy trading. Let me know if you have any questions and drop some notes down in the comments. See you next week. Happy trading.